if you want to get going as soon as you're ready, we've got still people entering the chat room, but if you want to get underway.
Yeah. Lovely.
Okay. So welcome, Sarah, to the webinar.
Thanks, Jane. Good afternoon. That's a good start, isn't it? Good afternoon, everyone. So today we are looking at NEC as usual, and today it's timescales. Really, really important. Quite often, and particularly historically, in construction contracts, timescales weren't too important, but they are now, I'm afraid. So it's sort of split into three today. We're going to look at the compensation event timescales first. Then we're going to have a quick look at some of the new clauses that have been introduced with NEC 4. Probably not working on NEC 4 yet, although if you've got a very recent contract, it might be. And the third part is that we're going to look at other general timescales within NEC 3 and, of course, still in NEC 4. A couple of points to note. First, that third bullet point, when we're talking about timescales, I've referred to the main contract timescales. Beware if you're a subcontractor, because typically those timescales would be slightly different for you. They will be shorter typically for timescales that you as a subcontractor have to comply with. Next point is beware of Z clauses, and I'll try as we go along to point out where Z clauses will be used, but Z clauses amend the typical NEC, the normal NEC, and usually they amend them to make the timescales in particular tighter for contractors and subcontractors. Finally, you may notice that there's a little bit of duplication in the slides. I've done that deliberately, particularly with the CEs. And in some instances, there are notes in the slides where I'm not going to go into things in detail, but they're more so that you've got the full package of information. So moving to the first third of the webinar today. So it's the compensation event timescales. And the rhetorical question there, is this the most problematic area of NEC? I think you probably know what my view is on that, but you can obviously have your own view. So what we're going to be looking at is notifying compensation events, whether you're the contractor or subcontractor or project manager, the timescales, submitting a quote, accepting quotes. So this is sort of a chronology, accepting the quote by the project manager or not. And then if the project manager doesn't accept it, what happens when the timescales for the project manager assessing the quote. And then finally, incorporating the changed price and changed completion date and key dates into the contract. Now, that chronology that we've just been through sits really neatly, for obvious reasons, with the clauses in the contract. So these numbers, 60 to 65, are the clause numbers. So 60 is the list of compensation events. There are a few others elsewhere, and we'll come to that later. 61 is notifying, so that point about contractor stroke subcontractor or project manager. 62 is dealing with quotations. So note that notifying the compensation event and sending a quote are two separate processes. The notifying is just a notice, doesn't include the quote. The quote comes later. 63, assessing the compensation event by the project manager. 64, project manager's assessment in the event that project manager doesn't like contractor or subcontractor's quote. And then finally, implementation. Just a note there, the flow charts. So you probably know that NEC has a really good set of guidance notes and also flow charts. The flow charts for these, 6 clauses, 20 pages. Perhaps that answers my question about, is this the most problematic area? So in terms of the time limits, and this is sort of the chronology, so following on from the previous couple of slides. So in terms of notifying, so not providing your quote, so this is contractor notifying a compensation event to the project manager, that's 8 weeks. It's a condition precedent, which means if contractor doesn't comply, then contractor still has to do the work, but is not entitled to any remedy. So we know that a compensation event gives a contractor the money, payment for doing the work, extra time, an extension of time, so relief from liquidated strict delay damages, and also any time-related costs. So if you miss this time scale, this deadline, you're not entitled to any of that, but still have to do the work. So that's a condition precedent. Really nasty. And I probably say this every webinar. They weren't very much used probably until about 6 years ago. Now that they're used widely and the courts will uphold them. So that's the first deadline. The next deadline is for the PM. So this is a bit like a game of ping pong, tennis, whatever. Contractor sent its notification, hopefully within the 8 weeks. The ball's then in the PM's court. PM has 1 week to notify the compensation event. So all it's doing there is saying either yes, it is a compensation event, or no, it isn't. I don't think it is. And at the same time, if the PM does agree it's a compensation event, PM has to ask contractor to submit a quote. Now, if the PM doesn't do any of that, if I were the contractor or subcontractor, I'd be chasing the PM because it's in everyone's interest to keep this process moving. So if PM asks contractor to submit a quote, contractor then, so next line down, has 3 weeks to prepare and submit the quote. With our tennis analogy, the ball then, once the quote's been issued, the ball's back in the PM's court. And then you see the next line down, PM has 2 weeks from receipt of that quote to respond. And in this instance, the PM is either going to accept the quote, it can ask the contractor to revisit things, or it can say it's rejecting it and it's going to make its own assessment, which then leads us to that final line in this chain where PM makes the assessment within 3 weeks. So the note at the bottom relates to the default provisions that follow through. This relates to a default where the PM, so those 3 lines where it starts PM is required to do something, where the PM fails to do that and potentially holds up this whole process. In that situation, the contractor is entitled to submit a 2-week notice to the PM. So basically that's a notice giving the PM another 2 weeks on top of the time that PM has already had. Now, if the PM fails to respond within that 2-week period, then there are deeming provisions. So for example, the second line down where the PM is supposed to notify a CE, if it fails to do that within that 1 week time limit, the 1 week time limit expires, contractor then sends the notice saying, you've not complied with your 1 week time limit, I'm now giving you 2 weeks to comply. those 2 weeks expire, PM still hasn't responded one way or another, then at that point deeming provisions apply, and the PM is deemed to have accepted that it is a CE and that the contractor can instruct a quotation. Now that is really, really helpful, particularly for the fourth line down, where the PM is supposed to respond to the contractor's quotation, because if PM doesn't respond to the 2-week default notice, so effectively 4 weeks in which to respond, then PM is deemed to have accepted the quotation. Contractor can apply for payment, and if the client stroke employer doesn't make payment, you go to adjudication on a really easy non-compliance. We are entitled to the full amount of the money in the quote. So, you know, these provisions are really important, but I still get people asking me about the fact that PM hasn't complied with these initial time limits. So, you know, is it all deemed to go in the contractor's favour? No, you've got to issue that default notice. So please don't forget about that. Now, clause 61 deals with the notification of compensation events. In some situations, it's not necessary for the contractor to notify, it's for the PM to do so. So they are, it's the bottom bullet point, the CEs listed at clause 60. So there's a whole raft. The main one is number 1, which is a change to the works information. But my view is that as contractor, if you think there is a CE, just notify within the 8-week period. It doesn't do any harm, even if it is a CE that is to be notified by the project manager. Time limit under the subcontract is 7 weeks. Typically, both of these I see being amended and reduced by kind of 50%. So just be careful about that. So that's that on that slide. So I think, yeah, I've covered that. So these are just general provisions about compensation events, because we've got a lot to cover. I'm not going to look at those in detail because they're more to do with the CE process than timescales. Ditto this, and we've already covered it. And this is just all about quotes. So I'm just going to skip over that. I want to talk about PM assessments. We've already covered the timescales, but just to say that the default provision applies to this. So if the PM rejects the quotation that the contractor has submitted, says it's going to make its own assessment, then fails to do so within the timescales that we've already dealt with, then contractor can give the PM a 2-week notice. And if the PM still doesn't make an assessment, then the PM is deemed to have accepted the contractor's quote. So again, a really useful one to look at, to keep an eye on. So just, all right, so that's just a summary of some of the points. Again, I don't want to look at this in detail, just because we've got a lot to cover. So some of the key points through the CE process. First point, and this should be the first action really, submit EWN, that's early warning notice. We're going to look at that in more detail later. But an early warning notice isn't a notification of a compensation event. Don't get them muddled. It's just a notice to say, sort of, something's going a bit awry on the project, the prices are going up, the timescales are changing. So it's just saying something is happening effectively. It doesn't necessarily, it could be something that's the contractor's risk, but you are obliged to notify. So it's just a fairly bland notice. It's not necessary. It doesn't need to say, try and allocate blame or whose liability it is. It is just saying, as a matter of fact, timescales are moving beyond the completion date, prices are increasing or whatever. Second stage, notify your compensation event. We've looked at that. 8 weeks under a contract, 7 weeks under a subcontract. Remember that in some cases, PM has the responsibility to notify, not contractor stroke subcontractor. Next stage, submit a quote. I've said there, even if the PM rejects the compensation event or fails to request it. It's time consuming, however, to submit a quote. So that's always a value sort of judgment call on the part of the contractor, subcontractor, but we'll look later at why you might want to do that. Remember, your quote must include the money side of things, but also the programming side, so extension of time, extensions to your key dates, extensions to sectional dates, and also any money relating, that kind of loss and expense element, albeit that loss and expense is a JCT term, not NEC. The key point is your quote has got to include all of it. And if it does include extra time, you've got to include a programme as well. Comply with the time limits, we've looked at those. And the rest are sort of tips, really, not necessarily related to the specific time limits. But first of all, diarise your time limits, but particularly diarise the PM's time limits so that, as soon as you can use that default notice, that 2-week reminder, you're using it, and that you're keeping on top of this and making sure that the PM is also. Updating and increasing quotes. This is an interesting one because, of course, the longer this process goes on from submitting the quote, if you don't kind of keep chasing to get a decision, there's a possibility that the work is carried out, by which point you don't have an assessed value, but you realise that your quote is inadequate. Now, there's nothing in NEC about this, but arguably the PM could then, if it realised that the quote actually was way under, the PM could just jump in and accept it at some point, leaving the contractor in a difficult position. So again, think about updating your quotes if you think that the sums are increasing and the PM hasn't accepted it or made its own assessment. Final bullet point, the PM under the NEC contract is entitled to say, let me have a quote, but on the assumptions set out below. So it may be, a good assumption might be, give me the quote, but on the assumption that there are no unusual ground conditions. It might need to be a bit more specific than that. And that means that the contractor's quote is going to be more sensible, more reasonable. And if then there are unusual ground conditions, that is automatically under NEC a compensation event. There's no such provision for the contractor to do this, but sometimes contractors' quotes are just going to be ridiculous if they're not allowed to make assumptions. So sometimes that is a realistic way of submitting a quote. Technically, though, be careful because there's no provision in NEC allowing the contractor to do that. We were looking at kind of updating quotes, keeping the process moving. And this case is a good reason for doing this. So this is the only really helpful case on quotes, 2017 case. You will gather NI is Northern Ireland, and it says there it's an Irish case. So Northern Irish law is, as it says in that first bullet point, it's not binding in the English courts, but it is persuasive. I suspect the English courts will follow it. Certainly in my experience, adjudicators are following it. And I mean, essentially here, what happened was all the notification was delayed. So neither party really followed the compensation event timescales and processes that we've just been looking at. As a result of which the consultant just randomly provided a quote quite late in the day when the work was complete. The employer didn't want to pay the amount of the quote, and the matter went to court to get it determined. And the issue was, when you go to court, because of course NEC with compensation event only talks about quotes. It doesn't talk about, you know, if the parties can't agree the quote, it's got to be a reasonable cost, or we look at, you know, the contract rates. In fact, NEC absolutely doesn't include any of that. So the issue was, if it goes to court, how does the court determine the value of a compensation event, assuming that it is agreed as being a compensation event? And the issue was, does the court look at the quote that was provided, you know, way back in the day and think, right, was that reasonable? Well, yeah, pretty much was, because the contractor was basically looking forward and forecasting its cost and forecasting its risk. So yeah, it was pretty much reasonable, so we'll allow it. Or, well, you know, the risk, you know, they've allowed too much for certain risks, so we'll take a bit off. Or does the court look at it on the basis of, well, we know the work has now been done, we know exactly how much it's costs because we've got invoices, timesheets, etc. So that's how we'll assess it. And the court, unfortunately, went for the latter, which of course is problematic for contractors, because effectively you now have the work of providing a quote, but if it goes to dispute resolution, you've also got to be able to substantiate your claim. You've got to have your subcontractors able to set out what the compensation event work costs them. Ditto for the main contract work. So you're going to have timesheets for people on site, specifically stating, you know, how long they spent working on, you know, compensation event 27, how long they spent on compensation event 28, etc., etc. And ditto prove the costs of your materials, etc. So not a great case for contractors and subcontractors, but that's where we are at the moment. So, you know, unfortunately, you know, you've got to do both, provide the quotes, but also keep all the backup documentation that you would for JCT. And it's slightly worse even than JCT, because at least in JCT, how variations and loss and expense are calculated is by reference to either the contract rates or, you know, reasonable rates for the work, whereas we've got none of that with NEC. So just be careful with that. This is just a list of other NEC timescales. We're going to deal, so next third, look at briefly at some key NEC 4 timescales, and then the other bullet points all relate to both NEC 4 and NEC 3. The key takeaways generally, the key one for contractors is your compensation event time limit, because of that condition precedent. So notifying a compensation event. For employees, sorry, that should be employers, effectively the client, and also the employer, sorry, the contractor in a subcontract. Beware of the certification time limits. Now, that's not just relating to NEC 3 or 4. It's based on the Housing Grants Act. and avoiding that smash and grab adjudication scenario where you don't certify within the timescales. And for both parties, beware of this new NEC 4 final assessment clause that we have that we'll come to. Now, this slide's just dealing with this condition precedent that we've already looked at, namely, you know, that if a clause is a condition precedent, it will say something like, you know, contractor, so it's this final bullet point, contractor has to notify a compensation event within a certain period, and then the key words at the end, failing which the contractor will not be entitled to any payment or any time in relation to a CE. That's the condition precedent, or the CP part, that's set out in that bullet point right at the bottom of the page. So that's a condition precedent. So NEC 4, not NEC 3. So this is the final account. So this is the bit that we've just looked at that both parties need to look at. We have similar provisions in JCT, but it's kind of a mixed bag as to, you know, whether parties are aware of them. Sometimes I come across people who know about them and use them. Sometimes parties don't. So the second bullet point, it benefits whichever party uses them potentially. So what happens is, this is all about the final account. So, you know, we now have a final account for NEC. And incidentally, it kind of shows, it's an example of how JCT and NEC are moving closer together, and how in this instance, NEC is adopting the practices used in JCT. So, final account. At the end of your defects period, so typically that's your 12 months from completion. Could be 24, depends what the contract says. So at the end, and this is the penultimate paragraph, a defect certificate will be issued by the project manager. So within 4 weeks of that defect certificate, the project manager has to submit a final assessment of the contractor's account. So that's final assessment is basically, you know, we would typically call it a final account. It's 13-week timescale where you're dealing with termination of an NEC 4 contract, but that's a sort of slightly unusual circumstance. If the defect certificate is issued, but then the PM fails to issue that final assessment, the contractor can issue it. And we'll see why you might want to do that, and might want to diarise this to make sure you're ready to issue it. Because this final assessment becomes conclusive. So hopefully you can see why this might be useful, because it's conclusive, including with regard to adjudications. It is final and binding. So it's very much like the JCT final account, unless one of the parties, so for example, if the contractor has issued it, the ball's in the court of project manager stroke client to either comply with one of these 3 indented bullet points within those timescales. So first timescale, within 4 weeks of the final assessment, refer the matter to senior representatives. Now, don't worry about that. That's just a new form of dispute resolution under NEC. The senior representatives are pretty much directors of the contractor company and the project, sorry, not the project manager company, the client company. So it's a sort of alternative form of dispute resolution. Or the matter, so this is the second indented bullet point, the matter's referred to adjudication within 3 weeks of the senior representative's agreement. or final indented bullet point, it's referred to the tribunal, so that's court or arbitration, within 4 weeks of the adjudicator's award. So, it is really, really important that if you're on the receiving end of a final assessment, you do one of these within the timescales, or if you have issued the final assessment and you were entitled to, obviously you can't just issue it whenever you want, you've got to be entitled to issue it in accordance with the previous slide, then the ball's in the court of the other party to start this process, and if they fail to do so, then it's conclusive on them. So whatever is in that final assessment is payable to the contractor, which I'm sure you can see is good or bad news. It's good if the contractor's issued it, because it will include everything it thinks it's entitled to, but it's going to be bad, presumably, if project manager's issued it, because it will be everything client / project manager thinks the contractor's entitled to. Final date for payment, once the final assessment's become conclusive, is 7 weeks from the defect certificate. The next provision, so this is a different provision in NEC 4, not as draconian, but probably useful on probably large scale, longer NEC contracts, useful for the contractor or subcontractor. So this is a procedure to agree the final amount due on defined cost up to a certain point. So it's, as I say in the slide, it's a sort of line in the sand. This is the defined cost up for all of this work that we've completed. I don't know, it's £1 million. Let's agree it so that we can't be increasing it, reducing it later on down the line. So it's instigated by the contractor. It can only be done when a part of the defined cost has been finalised, so you can't do it part way through a particular piece of a defined cost, but when a part has been completed or finalised, you can do it. The contractor instigates it by basically saying, can we agree this? Project manager then has a long time, has 13 weeks to respond. If it doesn't, though, no default notice is required. If it doesn't, it is deemed to have accepted it. So that's quite an interesting change. I suspect that clause typically will be amended in the Z clauses to either remove it completely or to require a default notice to be issued. But, watch this space. Once the defined cost has been agreed, it can only be changed by referring it to dispute resolution. So it's not set in stone like the final assessment we looked at previously. The final one that we're going to look at for NEC 4, remember, is the deemed acceptance of the programme. So, again, a problematic area historically in NEC, the programme, and particularly getting it accepted. So my advice to contractors and subcontractors is to try and get your programme included in the contract, and then you don't have the problem of trying to get your first programme accepted once you've started on site. This new provision potentially benefits contractor or subcontractor, that's SC, in a subcontract. So what happens is that we have the deemed acceptance provisions, so it's not automatic. So contractor is required to submit programme to the PM for acceptance. If the project manager doesn't accept or reject it, so basically doesn't respond one way or the other within the required timescales. Now the timescale isn't there. I think it's 2 weeks that the PM has to respond to the programme. then the contractor in this instance has to provide that default notice, so that reminder effectively, so that, that notice, dear PM, you haven't accepted / rejected our programme in accordance with 31.3. You've now got 1 week to do so. So it's 1 week, not 2 weeks, as we saw with the other deeming provisions for compensation events. If the PM still does not respond within that 1 week, then PM is deemed to have accepted the programme. So potentially, that could be really useful for contractors. Realistically, it's going to be really unusual, I suspect, that the PM misses both deadlines, but it does happen. I've had several instances under the compensation event mechanism where the PM has missed the initial timetable and then missed the timescales within the default notice. So the deeming provisions have applied. So it does happen. It's worth using them. So final section of today. So we're just going to look at the general other timescales under NEC 3 and NEC 4. So first tranche, we looked at those critical compensation event timescales. Second tranche, we looked at the key timescales that we're seeing that have been introduced in NEC 4. These are the general timescales that appear in NEC 3 and in NEC 4. So I said we'd come back to early warning notices. It's clause 16.1 of the contract. It's a mutual obligation. So you'll remember an early warning notice is just a notice to say something's going awry on the project, the time's moving out, that the cost is changing, whatever, something major is happening. It's for both parties to notify. So it's a mutual obligation. Unfortunately, the implications for the contractor not notifying are probably greater than for the project manager not notifying. So if you see that third indented bullet point, if the contractor fails to notify, and it is a compensation event, and we know it's not necessarily going to be a compensation event, but if it isn't a compensation event, if it is a compensation event, then the compensation event will be assessed as if the notice had been given. So if, for example, client can say, well, if you'd given me the early warning notice as soon as you knew about it, we could have done X, Y, Z, and that would have massively reduced the cost of the compensation event. So all we need to pay you is what we should have paid you had we been able to reduce the cost. That's all you're going to get paid. So that's how it impacts on contractors. There's nothing to say how it impacts on the client if the project manager doesn't comply. Now, what it is technically, I think, is that if the project manager doesn't give an early warning notice, then you go back to contract basics. If project manager should have been aware of something, and particularly if contractor wasn't aware, so you can see, that project manager should have notified because contractor couldn't have, because he didn't know about it, then project manager, simple, not done something he's required to do in the contract, that's a breach of contract. How do we deal with that under NEC? Well, it's a compensation event. It's the last compensation event in the list at clause 60. So my suggestion, if you get that scenario, obviously you as contractor have got to be clean on this. You've got to be able to say, well, we didn't know it was an early warning because we didn't know about it, or we didn't know it was going to cause problems or whatever. I would issue a notification of a compensation event based upon the fact that the employer's in breach because the project manager didn't notify the early warning notice. Whether there's any money or time attaches to that, it depends on the individual circumstances. Generally, I think it is unlikely, but I think it's a good thing to do because it keeps the project manager on their toes, make sure that in future, moving forward on the project, they are going to comply with these provisions. Programmes, we've already seen the new entry that we have at NEC 4 with regard to programmes. There's not a huge amount currently in terms of programming and time limits. What the contract says in the contract data part 1, so the part that the client has completed, is the timescale within which contractor has to submit the initial programme for the project manager to approve. And second indented bullet point, I said earlier when we were looking at NEC 4, I thought it was 2 weeks. So it's nice to see that I was right. It is 2 weeks. I'm terrible with time limits. Obviously, it's going to be different with subcontractor time limit. And so again, there's nothing in NEC 3 if the project manager fails to comply with that 2-week time limit. But if they do, again, going back to what we were saying about early warning notices, let's look at, basic contract principles. If they haven't responded, I mean, if they reject it within the 2 weeks, then that's a different point. But if the project manager doesn't respond at all within 2 weeks, then they're in breach of contract, because the contract says they have got to respond one way or another within the 2 weeks. So again, compensation event for breach, contractor notifies it. I suspect if that happens, then project manager will quickly then respond. And it is important because it is really critical, particularly I think for the contractor, to have an agreed programme, because as we know, all extra time relating to compensation events has to be included on the programme. Now, if the contractor fails to submit that initial programme, so this is assuming that that initial programme isn't appended to the contract, then this final indented bullet point applies. Clients entitled to deduct 25% of the sums due to the contractor in subsequent payment notices. So please be careful about this. Make sure you get your programme submitted, because that's a big chunky amount to be deducting. So I said there were some key time scales when we started this section. For contractors, the killer deadline, if that's what you want to call it, is the compensation event notification. For employers, for clients, it's the assessment and certification. So effectively, this chart deals with the timescales. I'm not going to look at it in detail. Hopefully it's clear. But the key points here are that contractor doesn't have to submit an application. So that top point, if it does, it must do it on or before the assessment date. But irrespective of that, project manager has to make an assessment. Now, clearly, if the contractor hasn't made an application, I suspect that's, really helping the project manager just to say, well, I'm making an assessment, but it's zero. So, I would always say contractors and subcontractors, make your application. If the contractor has made an application and the project manager fails to issue a payment notice, so it's that third line down, the certification stroke payment notice, and it also fails to issue a pay less notice, so that penultimate box, then when you come to the final date for payment, the contractor or subcontractor is entitled to be paid the sum in their application for payment. So that's smash and grab adjudication. You adjudicate on the basis that those two notices haven't been submitted by the project manager stroke employer where it comes to the pay less notice, and therefore contractor is entitled to that amount in the contractor's application. So that's why I'm not going to go through the timescales because we're running short of time, but that's what project managers need to look out for. And also contractors and subcontractors, you need to diarise these dates to make sure that not only do you comply with your timescales, but that where the project manager employer have failed to comply with both of theirs, and you know that you can see they get 2 bites at the cherry. If they fail to comply with both, then you can start asking for payment and or threatening smash and grab adjudication. Now, these next slides are just putting in chart form what we've looked at already with compensation event timescales. So you can see in that middle column, the timescales underlined 8 weeks for notification. Hopefully you remember that. 7 weeks for the subcontract. So it sets out the subcontract. So this is sort of in chronological order, hopefully quite useful because it gives the timescales in the second from last column and notes where it's a default position, so where it's contractors, subcontractors issuing that default notice. And it also gives the clause numbers, which will relate to both the contract and the subcontract. I said when I was in the first tranche today that the compensation events are listed at the first section of clause 60 of the contract, but I said there were others to be aware of, and they're set out there in the bullet points. So they're the X clauses. So if you know about NEC, these are optional clauses. X1, inflation, really, really important nowadays where we've got materials costs so volatile. X2, change to law. X15, reasonable skill and care. And Y2.4, where you suspend your work under the Housing Grants Act. So all of those are potentially compensation events. So the timescales relate to them. Now, in terms of notifying, all of these have got to be notified by the contractor or subcontractor. So don't forget about them. If they apply, you need to be notifying them within the 8-week deadline or whatever deadline there is. Dispute resolution, again, this is a really critical deadline, has really bad consequences if you should have issued it and didn't. And it relates to where you've gone to adjudication. So you've got to adjudicate in NEC before you go to court stroke arbitration. If you've adjudicated, usually I guess you will have somebody representing you. But if you've done it yourself, just be careful, because if you get the adjudication award and you are not happy with it in one way or another, or you're hoping to renegotiate the award, you must, within 4 weeks of receiving the award, issue to the other party what's called a notice of dissatisfaction, which is basically your notice saying that you are going to challenge the adjudication by taking it to court or arbitration, whichever one is stated as being the tribunal, that's with a capital T, within the NEC contract. If you don't submit that notice, then you are deemed to have accepted that the adjudicator's decision is final, binding, you cannot dispute it. So you might find that both parties are a little bit unhappy in different ways with the adjudicator's award, so both submit it. Even if you're thinking, oh, I probably won't take it to court or arbitration, I would always say submit the notice. It's not saying you definitely have to, it's just preserving your right to. And it also means that you can approach the other party and say, look, this adjudicator was really rubbish, didn't understand the issues. If we go to court, the court will do something different. So let's just agree and renegotiate a different resolution to what the adjudicator found. If you've missed that 4-week deadline, the other side are just going to say, well, no, it's all final and binding. We're not even going to talk to you about it. So just bear that in mind. Termination, just be careful. There are various timescales. I'm not going to go into this in detail because I think it's all there. But for example, if contractor fails to provide a bond or a parent company guarantee that it's required to provide, then that can entitle project manager to notify the contractor and then terminate the contract if the contractor still doesn't provide it. So contractor would have 4 weeks from that notification. Typically, it's not going to happen because usually those kind of things happen, because it's usually at the start of the project. But, don't get yourself into that situation because, obviously it's not good news if your contract's terminated because you haven't been able to comply with that timescale. In terms of terminating from the contractor's perspective, really, really limited. And that's typical of most construction contracts because you sign up to complete the work. You don't sign up on the basis that you can have loads of grounds to be able to terminate and not complete. The only real ground to terminate is if the employer, the client, hasn't paid sums that are due within 11 weeks of the final date for payment. It's got to be due, so it can't just be, oh, well, I've applied for £2 million last payment day, last assessment day. You only certified £500,000 and you've paid that £500,000, but I want it in full. That sum due in that case is the sum that has been certified by the PM. So it's only the £500,000. You cannot then use this process. My advice to either party, to be honest, is if you're going to start talking about terminating a contract, just get a lawyer involved, because if you terminate a contract, there's no going back. And if you get it wrong, you will end up paying for it. And that applies to both parties. So in summary, familiarise yourself with your obligations and the timescales. Diarise your timescales. Be really wary of those conditions precedent and those key timescales that we've looked at. And finally, check your Z clauses, which probably will amend a lot of the timescales that we've looked at. So that's everything. I do think that for me, I have done quite well getting through that 1 minute early, but I'm just looking to see if there are any questions. I think there were. Yes, happy to share the slides. That's a nice, easy question. I'm going to read out these. Oh, they're jumping about here. Right, how does the contract deal with the situation where the PM rejects a CE notification, but it is subsequently apparent, possibly following a further substantiation, that it should have been accepted? Well, the issue there is that if you think of the process, if the PM rejects the CE, it sort of depends on what the contractor does. The contractor can just go back to the PM and start saying, well, look, I think you've misunderstood. This is the scenario. And then PM can say, yes, accept it's a CE. Can you submit a quote? So at that point, providing the PM gets everything back on track again and asks for a CE to be submitted, you're back on the timescales, and not much has been lost by either party. The alternative route the contractor might want to go down is to do as I said earlier, which is to then say to both the client and the PM, you're in breach of contract because this is a CE and this is another CE. Realistically, though, I don't think there's going to be any cost implication for that kind of a delay. What you might want to do as contractor, nevertheless, is submit a quote just to show that you're not leaving this. And I quite like contractors and subcontractors when I'm acting for them to submit a quote, because it kind of says to the PM, this is serious, this isn't just, we've forgotten about it, we're not going to pursue it. It sort of shows that you're still pursuing it, albeit that lots of PMs will come back and say, you've no right to submit this because I've rejected it. But I think it kind of keeps it alive. And of course, if you're doing the final assessment under an NEC 4, you absolutely need that including in your account. Otherwise, you might submit your final assessment for 2 million because it's the compensation events that have been agreed and accepted, but you may have, another £1 million worth of compensation events that are still in contention. So it's absolutely right. It's one of the problematic areas of NEC. And it's one of the problems of having a contract, this plain speaking contract, because it doesn't go into the sort of ins and outs of what happens if X doesn't do this, what happens if Y doesn't do that, which JCT does a bit better. Right. So just a reminder, the next seminar, 28th of April, face-to-face at the Bridge, Walshford, starting at 8:30. I'm assuming that we get bacon sandwiches, etc. Isn't it nice to be back to normal? And I think that's everything. As I always say, if there's anyone still listening, if you have any queries that you think of later on, drop me an email. I think my email address is on the slides, or you can look it up, or on our website, or my mobile phone, stroke landline, will be on the website as well. So, do contact me if you have any queries. The billing clock doesn't start to run for these kinds of queries. So that's everything from me. I don't know whether I'm handing you back to